Good afternoon, everybody. Just wanted to show you my profitable earnings trade on Cisco, CSCO. As you can see, I initially sold this straddle. It's the 52.5 call and 52.5 put. I sold it for a total initially of $3.43. This was on 5/18, which was 2 days ago. And then earnings came out last night. And what I want to show you is that Cisco gapped down, right? And then went all the way back up. And right now it's up almost just 33 cents, pretty much unchanged for the day. But this blue line, you can see this is implied volatility. It went from 35% implied volatility and it dropped all the way down to 22%. So just in volatility contracting and dropping, the options that I initially sold, right, decreased in value. So if you look at the position, I open it up. I initially sold the 52.5 put for $1.43. It's now trading for $1.02. That's 41-cent profit. Each contract holds 100 shares, so I just made $41 as it decreased in value. On the call side, I initially sold it for $2. Now it's only worth $1.37. That's a $63 profit. So if I combine those two together, you can see that my trade is profitable for $104. That's almost 1/3 the price of what I sold it for. So I'm going to close out this trade. I was in it for only 2 days. So I just right click, say close position, and I can buy it back for let me bump it up to 240. See if I get filled. And you can see the order is working for 240. I initially bought it for 343. Let me see if I can bump it up to 340. 2 more cents. Pay it. There we go. We got filled. So here, the opening trade was for 343. The closing trade, I was able to buy it back for 242. So my net profit on that position is $103. So that is my update on the Cisco earnings trade. Again, anytime you go into earnings, you always want to look at implied volatility, because as option premium sellers, we want to sell when implied volatility is high because there's a lot of risk built into that option price. So it's inflated. After earnings comes out, all the news is out. Now there's no more risk involved. And so all that implied volatility is crushed, and we make money just on implied volatility crushing and 1 day of theta decay. And so that's a 33% return on my investment in 2 days. I'll take it and move on to the next trade.